Salut mes amis, and welcome back for Bitcoin Technical Analysis with me, your pal Rocky Outcrop. That was French, salut. Somebody suggested on the comments yesterday that I try French in this episode, and well, to be honest to that person, j'ai oublié tout de mes français since learning it in school, so it would be a bit difficult for me to do it, but I don't know, I mean I love languages, so I could obviously try. So let me see, let's bienvenue à tous de mes amis, et jetons un œil aux les tableaux. So welcome to all my friends, and let's take a look at the charts. Wait, okay, je suis Rocky Outcrop, je m'appelle Rocky Outcrop, and we're all friends together here. So bienvenue à the channel, and let's take a look at the charts together. But before we dive into the charts, up behind me, by the way, I have the 24-hour CME chart, and we'll be taking a look at that in just a second because we've got this gap over here and stuff like that. But before we dive into it, I figured that what I would do is just jump over to the channel here and remind everybody that, you know, we're all friends together here, and there's no point in coming along and being negative. So just thought I would do this on camera with us. We've got this guy here. He came along. He said, "Bollocks." That's the French word for that's some more French there. Excuse that guy's French. So I said, what's this? He's like, what are you buying or selling Bitcoin right now? And I think everybody out here in the channel knows that we are not tip givers and tip takers and all that sort of stuff, and that actually, you know, at any given time, to be honest with you, I've probably got both a short and a long on at the go, and I don't feel like, as I discussed in the Discord with people yesterday, I don't feel like there's really any benefit to me sharing positions really with people, because everybody's sort of circumstances are completely unique. The market at any given time is completely unique, you know, and there's no guarantee that that any decision I make would actually benefit anybody else given their own personal circumstances. And besides, you know, we're all about, what we do on this channel is try to encourage people to become self-reliant, you know, and there's no greater tool and I've said this enough times, you know, there's no greater tool as a trader than self-reliance, really, because what that enables you to do is iteratively improve upon your trading skills. And if you do that all the time, then you'll become better and better, and you'll not need to rely on other people for tips, which is why I try to have this integratable technical analysis on the channel. And, you know, anyway, hide user from channel, so fuck that guy. Anyway, back to the charts. And of course, I don't take decisions like that lightly, by the way. I never would take a decision like that lightly. It's just I don't want to expose anybody to negativity, or indeed to sort of mauvais thinking, you know, the French, you know, I don't want to have anybody thinking sort of in the wrong way. Okay, so anyway, right, so to savez quoi, you know what, there's a gap here on the charts. And also, actually, by the way, shout out to High Five who suggested it, and of course actually to mon ami Etienne, who was probably, I think, my first non-English speaking subscriber on the channel back in January. I think he was maybe the 20th person to subscribe. So of course, you know, a big shout out to Etienne, of course. I hope you're still subscribed. Who knows? Anyway, look, so we've got this chart, we've got the gap on the chart. Here's a 24-hour chart, as you can see, and the gap currently exists between sort of 9,280 and 9,810 here on the CME chart. So what we like to do on the channel is just to have a little box in here, sort of, so we can look and see if things are getting filled at some point, and we can bear this in mind. So now we know if the prices operate within this box and completely fill it out, that we filled in the gap, and I can kind of leave that for now. I've got the moving averages here set to 50 for the red one and 200 for the white one, and because this is the CME chart, and we're looking at the sort of the traditional Monday to Friday markets and whatnot. And just wanted to kind of point out what we were talking about then in terms of the sort of 9,200 area. Go back over to the brush here, and I can draw on just here. You can see that that the direction of this was going down, and then it actually started to go up the way, as we talked about the prices being above the 9,200, and what's happened subsequently is it's actually started to dip down again, you know. So we'll have to keep our eye out for how this goes. Obviously we want these things to cross over in general. This obviously is technical analysis and it's part of the whole story, you know, but there's quite a distance and time away for these things to cross over and everything else. We're just keeping an eye on this, really, I suppose, as more than anything. And we can see, is this set to 29 or 21? It's set to 21. We can see that the price action on the 24-hour time frame came right down and touched the 200 simple here, as it is so often wont to do. If you want to use some old school Jane Eyre style English language, something that what that means, by the way, want, W-O-N-T, it just is something that it does a lot, right? Okay, and yeah, so often it comes down and touches the 200 simple, and that's what's happened here. And we'll just have to, and you know, if the prices do come up and try to come up and fill this gap, as we're so aware with the CMEs and trading in general, that quite often these things can happen fairly quickly. And as you can see, just if we sort of, even if we zoom out a bit more, you know, and include even more price action on the charts, that there's a somewhat of a drop off in terms of the trading activity right up, and you can see the node here gets much bigger right at the very top of this box. So should we actually see a fill here, you know, or whatever, that you know, if the price action does come up and start operating on the spot prices up at the 9,300 area, you know, maybe you could see if this, with the CMEs kind of leading the way, taking it all the way up to the 9,800 or 9,700 area or so, without necessarily too much resistance in the meantime. Something to kind of keep an eye out for if that were to be the case. Anyway, let's go back over to the spot prices and try and take a look at what's been going on here. So in general, we didn't cut. We're still inside this wedge now. Again, you could say where the prices are operating below 9,000 area. And in terms of this horizontal line here, we want to see the prices go above 8,990 and stay up there a decent time frame to be able to get above this support and resistance line here that we have. We call them profit taking lines on the channel. The reason I call them profit taking lines, by the way, if you're new here and you haven't subscribed, hit that button. We do videos every day, and of course you'll have heard of horizontal lines before being called support and resistance. I call them profit taking lines, and it's just as a way of brainwashing all of you out there into realizing that that rather than thinking about things in terms of like support, which implies that if the price goes there that it would go back up again, or resistance, which implies if the price goes up there it would necessarily stop, that there has a bias involved in it, which might influence the way that you think about your trading or whatever. And it can be a positive thing, of course it can, but also it can be it can leave you somewhat exposed, where you maybe got an expectation, say if you're long and the prices are going down to support already, that you think the prices will turn around there, when maybe it wouldn't necessarily. And just instead of thinking of them as being profit taken, or sorry, support and resistance, I like to say profit taken, so that you're aware of the fact that in those lines people will be taking profit. So coming up towards these areas, you know, for instance, up towards this so-called, currently would be called resistance, and when the prices came up above it, you were thinking, oh, we're above resistance, that's turning support. That thought process in your head can be a little bit misleading to yourself, especially if you're somewhat new at trading. So that's why I call them profit taking lines. And as you can see, people were indeed from this down here, where we came down to the 200 simple on the spot prices and moved back up again, people were taking profit in at this line. As you can see, it's come back down again. So I think that little bit of a nuanced language difference there is maybe useful for the people. But obviously that's not a technical term. That's something that we made up for the channel here, essentially. You can see that the prices are above the 236, and this Fibonacci drawn in here. Maybe I should get rid of all the other ones because it's a bit noisy. In the meantime, I'm not sure. I don't know if you can see it necessarily. Maybe I should, but it takes effort to do it. Let's see. Fib retracement. Hide that one. No, that's the recent one. So hide this one and hide this one. Okay, and so you can see that we came up above the 236 on this Fibonacci retracement here. By the way, thank you very much for joining me. Really appreciate everybody who watches and takes part in this channel and is part of the Discord or follow me on Twitter or, you know, comments down below. Every single person that does it, even that guy that said bollocks, you know, I appreciate it to an extent. He could have just been, he might, you know, I appreciate it to an extent. Anyway, this Fibonacci is drawn in wick to wick, as you can see just down below, if I just actually line it up properly. And the 236 here, which we're above currently, which is a good thing because it keeps this as being an invalid one in terms of, you know, the long side proposition. That there comes in at 8,593, so 8,600. But if we move it up body to body, you can see it's obviously in a slightly different position, and you can see that the prices are just, you know, we are currently operating just above them, but that price then puts it at 8,800, and you know, so that's your little dynamic there. You've got 8,800, or you could be thinking about it from a position from sort of the 8,000 sort of 600 area. I think probably in terms of just, you know, just in terms of keeping ourselves on the right side of things just now, given the volatility, I'm just going to leave this one in body to body because it tightens this whole thing up, you know, and on that basis, then it'll maybe give us a sort of little bit more of a clue in terms of, you know, in terms of how the prices are operating. It opens up it makes it so it's easier for us to look at the sort of the 3 or 4 areas around about this area where you could have, you know, people thinking about price action. You've got this red line, which was previously was the you know, in and around this rectangle shape. That's coming in at the 8,600 area. Likewise with the 21 EMA, 8,580, whatever. At 21 EMA in there, you know, maybe you could look towards that in terms of just, you know, the fact that we're above it, that's a good thing, and all the rest of it. But let's just change this over so that it matches up again, because we're back into the week now as well. Let's just change it over so that it matches up with the moving averages that we see here on the CME charts. Just as a wee reminder to people that this is kind of sort of an experiment that I'm running at the minute to see how the prices perform around, you know, with it including the weekends. So I'm using 70 and 280 there. Of course, those numbers could be slightly different, and of course as well, it doesn't include bank holidays and all the rest of it. You know, it's not an exact science, that sort of thing. But anyway, likewise, anyway, it came in, touched the 280, sort of bang on the 280 with its wick, and then up again in terms of today's price action, and that all comes in around, you know, all 3 of these things coming in, the 200, the 21, that line. So the 8,500 area is kind of how I'm thinking about things in terms of risk management, just really at the minute. And small moves are probably better off in terms of, you know, just taking profit, in my opinion, at the minute. I'm not a financial advisor, no, that's financial advice, of course. But you know, in terms of being greedy right now, I think that it's probably even less wise. And we're coming away. How far away are we from the halving and all the rest of it? Now, actually, I suppose it's worth mentioning the halving. That's happening today, and a lot of people think about this halving event as being a sort of a singular event which will happen in a moment in time when the person opens up the code and types in the different numbers and changes it changes the reward down a bit by half, and then after that the event is over and it's as if it's a sort of binary thing, you know, or it's just a singular moment in time. And in actual fact, it's probably better off thinking about the event of the halving as including all of this positive price action in the run up to it as well, and then a significant period of time thereafter, while the boundaries of the event are not clear. And if you want a big explanation about why that is the case, then look at the suggested video that's in the card and at the end of this one, where TradeSpot explains the sort of event psychology. And I think it's really useful. It's a useful sort of idea, concept to bear in mind. And this is the biggest single event that'll happen in terms of crypto, really, from a fundamental point of view, for, you know, so far this decade. Put it that way. Right. 2020. We're not very far into this decade, so until 2024. Right. Anyway, what else have we got in terms of price action? Let's look at the oscillators and see. So we've got a lower low over here compared to this area. Oh, something that we're talking about. This is compared to this as your low, but it's debatable. What areas are we really looking at for in terms of the low? Well, could you say that this was? Could you really say this was a low at 8,630, or are we going to have to look down to the 7,700? And what do I mean by all of that? Well, just in general, you tend to have, what you look for during an uptrend is to have higher highs and higher lows, and so you know, as so long as the price is putting in a higher low, we're still in an uptrend. So at what point do you want to cut it? It's up to you to make these decisions yourself. And in fact, let's go down to the 12 hour so it's even more sort of ambiguous. What point do you want to say? Do you say that this is a by even more ambiguous? What I mean is on the 12-hour chart, this is actually not even lower than over here. So, you know, this is a higher low on the 12-hour chart compared to here if this was our last low, which was indeed also higher than over here if that was the last low, etc., etc. And go over to 24-hour chart. This is lower here than it was previously, you know, but it's higher than just here. And you could be looking down to there for your higher low. And on the 2-day chart, well, we're still kind of putting this in at the minute. We've got 10 hours and 10 minutes left on the 2-day chart. So who knows exactly where our higher low or whatever will come in at this particular point. But as you can see here in the 2-day chart, that there isn't a single red candle in amongst this bit here. And this is what I kind of mean about it being all part of the one upward movement here. And in fact, there isn't a red candle on the way up here either, which is why you can kind of really then come down and say, look, you could even be looking down as far as that 6,850 level that we've spoken about so often in terms of higher lows. And what do you have in at that 6,850 level? Well, that's where the 618 on this particular Fibonacci is coming in at, and that doesn't strike me as particularly much of a coincidence. So a lot of bears out there could potentially be looking for a golden pocket retrace for the price to come in here to that 6,800 area where we've been talking about so often. And what would that represent in terms of price action? Well, if you were to talk about it from in terms of percentage moves, you'd have a good solid 30% move, and we've seen 30% moves happen after the halvings in the past. So that's something which is in play at the minute for the bearish case scenario. And of course, the bullish case scenario kind of speaks for itself, but I've spoken for it already in terms of just the simple concepts of higher lows and that sort of a thing in the meantime, you know, until such times as as you're able to say that the trend has changed. It hasn't. Let's go down to the 4-hour time frame though, where we can say sort of categorically that since over here our highs at $10,000 that we've had a bit of a downward trend, and we could open up the oscillators at this point and look and see if we've got any divergence showing up just yet. And of course, it's all a little bit early to say, you know, it's still always a bit early to say when it comes to these things. You don't want to preempt it too much or be premature on it. But if you consider this to be a low and this to be a low, and if you consider this to be the next low, which is lower than that previous one, and you look here on the RSI and you look here on the stochastics, and well, you know, not so much. I mean, on the MACD, it's, you know, you could say there's divergence there, but it's all part of this. The MACD kind of showing it as being kind of part of this singular movement or whatever. Anyway, yeah, you could say that there's a bit of bearish or bullish divergence there, and then that kind of asks the question, well, will we actually see this line operate as become this profit-taking line? Will this profit-taking line, which is, you know, consider it a profit-taking line at the minute until such times as, you know, it's changed into something else. If again, this profit-taking concept, you know, you can see here this profit-taking line. If you were just over the period of from the 30th of April all the way up until the 6th of May, a whole week, you could have thought of that line as being support and resistance, and the language there doesn't really help. Whereas if you'd have thought on that whole week that line was a profit-taking line, you could have made dozens of profitable moves operating just purely around that, on that basis alone. So that's kind of what I'm looking at. Will it remain as a sort of just simply conceptually as a profit-taking line in the meantime, or will we see it turn into either support or resistance? You know, are you going to say that this line was support or resistance throughout this entire period here? Or what are you going to say it was? Was it support or was it resistance? Or was it just was it neither? In which case, you know, if it's neither, fair enough. But it's on the chart, and I'm not going to draw in dozens of these things and try and identify, you know, different support and resistance zones, because essentially all this line, while it is a really thin line, is essentially just is symbolic of a zone overall. Yeah. So anyway, we're inside this wedge. Do we, you know, if that continues to be the case, and we go down towards this area, and that's into the 7,000s, as we spoke about as well. If we go back down to the 382 Fibonacci retracement or whatever, then we'd be below the 200 simple here on the 24-hour time frame, or the 280, you know, in terms of the CME charts, 200 simple, and we could then be looking to go down the way. And if we were to then, I'd be hoping for fake outs to stop to only go as far as the 7,200 area, or else, you know, you could be looking down into that 6,850 area thereafter. and there's plenty of trading opportunities to be had in the meantime. We know that in terms of the 24-hour time frame, that this high and this high was bearishly divergent on the stochastics, and that for it to go and not be bearishly divergent, it would have had to have gone up into like all-time high type territory on the stochastics. And Walter White in Breaking Bad said the final 3% is the hardest, you know. So like going from that 93, 96 area up towards that 100 or 102 or whatever would be like, you know, significantly harder than it is for this to go from 71 up to 80, you know, in terms of the, you know, like, so just like when you're cooking crystal meth, which we're all familiar with now, having watched that TV show, you've got to be aware of these little sort of things. That's quite a hard target for it to reach compared to, you know, just a movement in between times. And I think that really is kind of bounding in around our this kind of can well, in terms of the technicals, that's really kind of going to have to do it, because we have the halving coming up, and when is it? Is it in about 6 hours from there, or 5 hours? By the time you're watching this video, it might have already happened. And there's this, and there will be a sort of a psychological impact, especially 90% of that coming from the sort of the retail aspect of the trading, because you know, if you're in Bitmain and the board of directors, you're not kind of going to just suddenly react to the halving, are you, in terms of an event? And they've of course got a hell of a lot more Bitcoin than any of us put together. If you're a massive Bitcoin whale, then maybe you're thinking about it slightly differently as well. You know, there's lots of different aspects to this event coming up. So the people who will be reactive around that time would be the retail type of people, and of course transference of wealth can happen between the small fish and the big fish. So I'd have to just kind of want to recommend caution, you know, really overall, and point out, I suppose we've got this 20 minutes and I'm only really boiling down to saying a few things here overall. This line, you know, they're the sort of the big deal ones. This is on logarithmic at the minute, so if I go back to linear, because I think I drew this monthly one on linear, yeah, essentially on linear as well, you can see then in terms of the monthly chart, you know, we're right in here at this significant resistance line. You know, I'm happier to call this white line down here in terms of support and resistance a resistance line. It's a downward sloping resistance trend line, because you know, we've seen that operate as that now. So those are the sort of the considerations that we have to have, and let me just take a second, I suppose, here to think if there's anything else to be mentioned. Yeah, JBTC, we've talked about this a bit as well recently. This is go back to the recent, in terms of recently, what I mean is we point out on the CME charts when there's gaps, and you can see here in the 24-hour time frame that there was a gap. When this opened up, there was a gap here on the GBTC earlier on, but that's been filled already. So the GBTC gap towards the upside has been filled. So that's interesting to take note of. Whereas the CME gap towards the upside hasn't been filled. The GBTC gaps then that remain on the chart of note were this one where the price is currently operating right now. You had it, you know, from last week essentially, or from the 6th of May and the 7th of May, not last week, but there you go. Not a week ago, whatever. There was a gap there. That's obviously been filled today as well by the price action. And then the other sort of gap that comes in is down here where this yellow line is, and that puts the price all the way down at 7,000 or 740, and that ties in well enough with the gap on the CME chart to the downside in around 7,500 on the 4-hour time frame. Can't see it here, whatever. Then the GBTC gap, the next one on the 24-hour time frame, we have a gap in this area down here, which would take us all the way down to $6 or so, which in terms of the spot prices would put it all the way down to 5,500, and you can imagine that would be very significant, scary territory as you're looking between this area in terms of the Fibonacci retracement drawn in body to body. You've got like the 786, you'd be hoping for a turnaround there in that 5,000, that 6,000 area. If not, you know, you could be looking at a full 100% retrace on down to 4,800. There's actually other CME, there's other Fibonacci areas in here, sort of the 5,500 area as well to be aware of, and 5,500 is a significant area in terms of previous support and resistance too. So there's all of that to be taken into consideration. And there was something else I was going to say. Yes, somebody pointed out in the comments recently that if you go back to, you know, February 2018 over here on the CME charts, let me just do this real quick. Get rid of all that, go back over to February 2018, is that right? I think that's what they said. There is a gap at 3,500. Where is it? Where is the prices? Oh, we're a ways away still, sorry. So February, and there must be a gap in around here somewhere. Excuse me, let me just get rid of all of the moving averages as well. Don't need to have that blocking my view. Really, oh, there it is. I've actually drawn it in the past. There's me asking the guy in the comments, oh, could you maybe point it out to me because I can't remember where it is, blah, blah, blah. Well, there it is. I actually drawn it in the past. If there's one other gap, if you're concerned about 4-hour gaps, now 4-hour gaps are not as significant as the 24-hour one, but we have a 4-hour gap here on the CMEs down at 3,500. And, you know, I mean, ultimately, I'm not sure if there's any historical 4-hour gaps since this thing got created that haven't been filled ultimately. You know, looking back the way, I think that every single gap on the CMEs has been filled at some point. And could we bear this in mind as being an ultimate, absolute destroyer target in the future? You know, it could completely and absolutely wreck so much of the market, and it hasn't been necessarily filled out. So there's that. Oh yeah, and there's one last thing. God, this is dragging on a bit. There's one last thing I kind of wanted to point out again, and that is, of course, so if you've just joined us to the channel and you weren't watching last month, or not last, I don't know when it was that we're talking about it, but a while back. If you weren't watching a while back, then you wouldn't have seen me having these patterns on here. Just leave out the smaller one, in fact, and just leave the bigger one on. So we had a Gartley drawn, and this is called a harmonic pattern. These, the person that wrote the book is probably the most bland, talking about language a lot recently. He's got this, he's it's very, Mark Carney he's called. Is it Mark Carney? That's the governor of the Bank of England. Oh, I always confuse the guy's name. Anyway, this guy, or is it Mark? I don't know, I can't remember. Scott Carney, that's it. Wrote this book. It's called about harmonics, and it's really, really good. You know, and one of the aspects about this harmonics trading is that it, you know, it really tightens up your rules on trading for yourself. So like, you know, and one of the things about being a successful trader is self-discipline. And if you can't really be self-disciplined, then harmonics is a great route towards doing that, because it gives you a framework for that discipline. So maybe you should look into that if you're struggling with self-discipline as a way of sort of trading successfully. Anyway, there's this pattern called the Gartley. Scott Carney is obviously the sort of the guy that's flying the flag for, in terms of the modern era, since computers came around, for harmonics. But back in the 1930s, whenever there wasn't modern sort of technical analysis, you know, before the MACD, the RSI and stochastics and whatnot got invented. I say that, but stochastics comes from the Greek word, so it's a concept that's thousands of years old. Don't take me too literally on anything I say. But I wouldn't have mentioned that, however, we're not talking about language so much. Anyway, this guy called Gartley back in the day came up with this idea of these patterns, and subsequently it's become known as the Gartley pattern. And this is a bullish one, and we pointed it out, you know, back before this sort of all happened, and it came all the way down to these lows here, and it was a pretty good indication that we would have an upside potential here. Except there's always the danger with these things that you didn't have, that you're really supposed to have a bottoming formation to go along with them, so that, you know, it's not just this in and of itself in isolation. And we didn't really have that, unless you kind of consider maybe this to be a bottoming formation of some sort. I mean, if I go down to the 12-hour, for instance, is it 12, maybe the 4-hour or something. No, you can just this wick alone, maybe you think that's a V-shaped recovery. As you can see here, it wasn't really so much a V-shaped recovery really at all. So we never really had a bottoming formation really necessarily distinctly, so to speak, coming in here. And we also didn't have, if we look back here at the 24-hour time frame, we also didn't have the bullish divergence on the RSI, or on, you know, you can see here, but that's frustrating. You can see here that between these lows that was not bullishly divergent. Likewise on the MACD, you can see it wasn't bullishly divergent. So where was it bullishly divergent? Well, it was on the stochastics, which we so often talk about as being important. But in terms of trending moves, you know, the RSIs perhaps trumps it. So you know, we didn't have that back then. So in terms of big dangers, if you're looking out for big dangers in the face of fundamental changes in the market, that would be, you know, that story is one that could play out in the longer term. So that's something to look out for. But of course, what's that called? That's called massively getting ahead of ourselves. But I'm pointing that out because it's happening day to day. You know, we're having day to day. So we might as well look at all that sort of stuff and be reminded of these things. You know, this is a potential really good formation, but but we've taken, in terms of the profits that could be taken off the back of this thing, we've had, we've had, like, you know, good moves here. If I just put those Fibonacci's back on that I took off earlier on, this one, and This one? No. Well, actually, that one too. No, okay, we'll leave that one off. That one, right. The other one that I was considering putting on was actually, directly pertains to this Gartley. But I invite you to go and look at the charts yourself and draw these things on and sort of spend. There's always time for technical analysis, and if you're looking at a macro view, then there's days of time for it. So go ahead and do it, experiment yourself, and take a look at certain factors. But what we've got here in terms of this one, and the moves back up from this downward move on the C to D move here, which is where these Fibonacci's are drawn in from. You can see in terms of the C to D here, if we go on the wick to wick one, that it came all the way up. So wick to wick going 618 there, 786, and we might actually be on the 786. We've had lots of, in terms of the Fibonacci structure following this Gartley, we've had lots of our targets off the back of the Gartley be met. But where could we actually go in terms of this thing? Well, the Gartley pattern could take us up as high as 14,000. It could actually do that up towards the 1618. That could be a target you could have off the back of this formation here. But in the meantime, you could actually see something coming in here again, and it could always turn out to be something like this in the longer run. It could always do that. But anyway, that's just something to be bearing in mind. We've had profit taking targets off the back of this pattern. We never actually made it as high as the C point, but we made it up to the two first initial ones, which is the B and of course the 618 on Fibonacci retracement there for the golden pocket. And since then we've seen the 618 kind of operate as support for us, in terms of this thing. So that's all very positive. And yeah, I suppose that's going to wrap us up. That's 30 minutes. I've gone on for maybe a bit too long. Maybe I could have done with doing a bit of homework beforehand. But anyway, I think I've recovered everything that you need to know from a sort of integrate this with your own technical analysis to keep yourself sort of FOMO free, greed free, seeing the bigger picture. And really, in terms of the smaller pictures, everything that's in and around this little lines in this area here, and all that for now. With fundamental changes coming up on the market, I'm not going to rely exclusively on technical analysis. It's why for today, when the retail FOMO and greed and everything could kick in and sort of panic or whatever could be happening, I want to just remind people that small wins consecutively put together over a period of time can add up to be as good as any big win. Just think about this period here that we saw between the 6th and 10th, or whatever, the 30th of April and 6th of May, in terms of the amount of small wins that you could have got versus the big wins that also you could have got too. I mean, we were talking about them all obviously at the time we knew about these big wins. So you don't need to be greedy. You don't need to be greedy in order to make money trading. And that's kind of just going to throw that out there as a reminder for folks. If we do see the prices go above 9,200 and actually open and close above there, then the next target to have in mind is 9,500, thereafter 10,000, before getting too carried away again. Just have to see how this is all operating in terms of divergence and whatnot before then saying 10,500 is realistic or not. But that would be the next one thereafter. Towards the downside, you got 8,000. Going past these areas of 8,500 and sort of 8,200 or whatever, 8,000, you've got this potential sort of low area again here for the higher low coming in at sort of 7,500, and it could always go down as far as 6,850. That would be a massive shock to people, a 30% drop off in terms of the prices since the highs, and maybe that would satisfy sort of the halving drop, but that could happen at any time over the next couple of weeks. And yeah, so that's that. And the bullish case, as ever, I feel speaks for itself, really, and that's going to do. I'm sorry for letting this go on, maybe perhaps a little bit too long. I'm not too sure. Let me know in the comments down below what you think. Avoid saying bollocks in capital letters unless you want me to ban you from the channel. And of course, everybody here, we've got 600 solid friends, growing community. Everybody's welcome to join and to join the Discord and to chat away and all the rest of it. So massively appreciate the contribution that everybody makes to the channel, even if that's just watching the video alone. I massively appreciate it. And if you hit like and subscribe and all that stuff too, well, merci beaucoup. And I really appreciate it. So yeah, catch you next time. Thanks very much.